The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. Bank statement loans for those of you that are self-employed. Maybe you just get a 1099 and don't have all the bank statements. Got that for you also if you're a 1099 employee. VOE loans, verification of employment. We can do that. Maybe we don't even have the formal pay stub, but you do have a company that you work for, not your own, that gives you can do a verification of employment. FHA loans, VA loans, USDA loans. What else? Reverse mortgages, you name it. Our friends at Geneva Financial, they're doing all of those for you. So let's see what's going on in the marketplace. The S&P 500 now up 60 points. 10-year Treasury's up at 2.895. Our seniors are probably happy about that. Those living on fixed income, they might finally start getting a little bit of money for their savings. The mortgage-backed securities down 17 basis points. That's been an improvement today. So improvement from where it was earlier. It was down quite a bit more earlier in the trading session. And what does that mean for interest rates? I think I shared it in the last segment. 30-year conforming rate, and I better get the disclaimer in here. OBMMI provides the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. So this is where the loans were actually locked at. So you can hear these commercials, and they can tell you anything they want. Some of them even follow the law. Some don't. But loans yesterday were being locked, according to OBMMI, at the 30-year conforming rate, 5.274. The 15-year rate, 4.38. 30-year jumbos, 4.7. 30-year FHA loans at 5.122. That's where they locked at yesterday. Again, about up a point and a half over the last 30 days. So just be aware that it's been kind of crazy lately. We've been watching these numbers, and we've seen what's been going on. See if we go back to if I get a January 3rd, first trading day of the year, 3.409. 3.409. So we're almost at 2% up for the year so far, almost 2%. So we're watching those numbers for you. Now, you don't tune in here for me to tell you what you can find on that super secret website, google.com. What you're looking to us for is to give you an idea of why this is happening. So the mortgage bonds, I told you, they're getting closer and closer to 3%. St. Louis Fed President James Bullard spoke yesterday, talked about a possible 75 basis point rate hike. Ugh. He wants to get the Fed funds rate to 3.5% by the end of the year, which would mean 50 basis point hikes at every upcoming meeting this year. World Bank slashed their growth forecast from 4.1 to 3.2. The largest single factor in the reduced growth forecast was a projected economic contraction of 4.1% across Europe and Central Asia. Other factors included higher food and fuel costs. Does that surprise anybody? Russia-Ukraine war. The IMF, International Monetary Fund, also said this morning that they expect global economic growth to slow and feel the overlook has deteriorated. These are just additional indicators pointing to a global slowdown and increases the chances of recession. National Association of Home Builders Index measures builder confidence dropped 2 points from 79 to 77 in April. Currently, sales fell by 2 points to 85, which is still very strong. Buyer traffic fell 6 points to 60, while future sales expectations increased 3 points to 73. While some of these figures are contracting, they are still at strong levels. Anything above 50 shows strength. Housing starts increased 0.3% in March at an annualized rate of 1.79 million units. Remember I told you yesterday that we're 3.8 units short, and we never build more than about 2 million units. That's our high. So we've got an annualized rate right now of 1.79 million. Year-over-year starts slow down. Starts are now up 3.9%. Single family, the most important, decreased by 1.7%, now down 4.4%. Permits, that tells us what they're planning. Those rose by 0.4% last month and are up 6.7% on a year-over-year basis. Single family permits fell 4.8% and are down 3.9% year over year. Speaking to the builder backlog, single family units authorized but not yet started are up almost 15% year over year, while single family completions were down 6.4% last month and 3.3% year over year. Clearly, the single family figures are not what we had hoped for to alleviate the inventory issues. But it's important to remember that there are two sides of the coin from an economic growth standpoint. Tight inventory and less home sales is a negative. But when looking at housing as an investment, tight inventory is supportive of home prices. Now, here's the issue right here. Why are they not building more? And why do they have these permits that they've got and they haven't started using them? Well, it's all investment. We've got the supply chain problem. We've got the chip shortage. Why would the builders want to put more money into that? They've already paid for the leases and they've paid for the property and they paid for the permitting. Now, those things are going to have no matter what, but they're looking and they're saying, you know, something, we can't complete the project. So maybe if inflation slows down, if we wait a little while, because we can't complete it anyway, we can't sell it, we can't get our money back, why put more money out there? So why pay at high lumber prices? Why pay at high labor prices? We have labor shortages. Why put all this money into the property, into the project, where they cannot finalize the project? So that's why we're seeing this on a regular basis. So that's kind of the issues of what's going on. That is the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990. 800-306-1990.